Anybody can compare the total returns, your standard deviation, dividend yield. That's easy. But if you really want to understand VTI and VOO, really understand them, you need to go deeper. Let's talk about how these funds behave in different economic cycles, what their differences really mean, and why your choice might say more about where we are in the market than you think. So major difference between VOO and VTI. So VOO is tracking the 500 largest publicly traded companies in the US, where VTI is tracking the entire US stock market. So it's including the large, mid, small cap stocks, around 4,000 companies in total. If we look at their expense ratios, both expense ratios are 0.03%. We can see that the dividend yield is just a smidgen higher when we look at something like VOO. We're talking about, at the time of recording this, 0.01% of a difference when it came to the dividend yield. And both asset funds have billions of dollars under management, so high liquidity. So both of these funds are quite similar in a lot of ways and quite different in a lot of ways. So let's get into some of those differences. So just looking at the screen here, again, all of these different things that I'm showing you, I will leave links down below so that you can go and have a look at this data yourself. So this is from ETF Research Center. So we can see here that if we compare VTI versus VOO, we've got an 88% overlap, so about 12% that's different. We can see that there's a few sector differences, really minor in regards to the sector differences. And so basically when you're holding either the total stock market or VOO, you're essentially holding that full basket. So the sectors will constantly change and there will be a slight variance, but I believe that that variance really isn't its big, huge, gigantic distinctive factor. It is something that will always never be exactly the same. But I think the big difference really comes down to how many holdings they have when it comes to large, medium, and small. And so this 88%, if we actually go over to VTI, we can see here that the style box is showing us that it basically has everything in here. We have growth, we have value, we have large, mid, small. So this right here is telling us really the types of companies that it's holding. We can see here that when it comes to the large, we've got about 68.8%. We could see small, 7.9%, mid-small, 6%. And then when we go over to VOO, you can see that this style box here is actually up in the large category. So really what we're dealing with is seeing the types of companies quite different here. And again, this is something so simple. When you just really think about what it is that they're capturing, we know that VOO is the large companies. We know that VTI is the total stock market. So this is a no-brainer. But if you look at the percentage points here, you can see 77.9%. And then you can see small 0.6 and 3.9. And so then you'd have to look at it and say, okay, so what is the difference here? And so the difference we're really talking about is about 10%, where you're really taking 10% out of that large cap and you're really throwing it into the small and small medium, somewhere in there. And it does have a bit of medium in the VOO. And if you go back to the VTI, you can see that the medium is actually relatively the same. So really the big difference is looking at that large and small. And again, there's a slight sector variance. So this is something that I feel like doesn't get appreciated when we're looking at the differences between VOO and VTI. And I don't believe a lot of people are actually comparing these, comparing and contrasting these things too thoroughly and really expressing what kinds of differences there are, little nuances, and then what those implications are in regards to their portfolios or the larger market. And so that's really what I want to do here. So now when we look at the large cap, we can see that the stability is fairly high. And that's because when you're having a big, giant company, a lot of times when you go through these economic turmoil type situations, they've got these very large cash reserves usually sitting on hand. And so they can weather these storms. As well, when it comes to just the sheer size of them, you look at Coca-Cola just as an example. If Coca-Cola is already saturated into the market, everybody knows who Coca-Cola is. They're not able to go out and try to discover a new market. They are the market. They know where they are in that market. And if anything, there's people that are trying to compete and take Coca-Cola's spot. So that's why they have the stability. They're on the fairly high end. Their growth tends to be low. And obviously because the expansion, they're not able to do as much expansion when you're dealing with large cap. But then again, on the small end, right, you're going to have, the ability to just skyrocket and shoot up and really take a lot of market share. So that's something that's quite interesting with small caps. The risk tends to be a lot lower with larger ones. A lot of your blue chip companies are in there. They've proven themselves. They've obviously have the total market as a result of being able to prove themselves time and time again. And so people are invested there, where small, on the other hand, tends to be high. And again, I'm not leaving out the mid. The mid's kind of in between on pretty much all of these various things. There are a little bit of nuanced differences, but I'm not going to cover that because a lot of the major differences between VOO and VTI are between the large and the small. But just getting into the liquidity, on the large, you're dealing with, higher liquidity. Small, you're dealing with a lower liquidity. Again, when you're looking at VTI, VOO, these kinds of things don't necessarily matter as much because you're buying the basket and they're doing all that trading on your behalf within the large and the small. And then dividend frequency is, a lot more in regards to when you're dealing with a large cap versus a small cap, because a small cap, on average, I would say, tends to, especially when it's growth companies, they're going to reinvest that money and put it back into the company because they're trying to grow the company and make it a lot larger. Just a really quick recap. So if I take a large cap, they're usually more conservative income. They tend to perform better in stable or declining markets. Mid caps tend to thrive during economic growth phases, where small cap is usually more aggressive. They have larger growth. They tend to excel in early recovery stages of economic cycles. And if you look back on the charts, you'll see that they have these really wild high spikes that can kind of come up. And there's a lot more volatility when it comes to the small cap. So that's something to kind of think about. But they definitely do suffer during those downturns because, again, they don't have all that cash on hand. They're not able to weather some of the economical cycles. And so they tend to start to die off a bit in those types of conditions. Again, these things are just relatively speaking, not every company is going to have the same characteristics as another company. And so you'll have always variances, but these tend to be generally true. And then just getting into the comparison between the large, the small, and the mid. Just going back in data here, and even if you go back a bit further, you can see that the mid and the small cap tend to outperform the large cap. When you look at the last 15 years, you're going to see that the large cap has outperformed. And so my take on it is I believe that the small caps do have the potential to give a higher yield, a higher return. I think the mid caps do. I think there's a risk associated there. And I think people, when they're investing, I think, whenever there's something that's a little bit more high risk, there's a higher return. So I believe that the pendulum will shift at some point back over to the small caps, back over to the mid caps, because the long span of history does prove itself to show some favorable trends to continue on, and cycles do change and they do end. So you might have large cap winning out, which it has done historically in the past for many years in a row. Then you'll have mid cap that'll do better. You'll have small cap that'll do a little bit better. And so large cap has had its run for quite some time. A lot of that's due to the tech sector. But when we look at the situation now, I'm really feeling like when you look at the small cap, you look at the higher percentage, just going back into the longer history books, I feel like that is something to really think about and to pay attention to when you are looking at the comparison between these two. So what we're seeing here is an article by Aberdeen Investments. I will leave the link for this. And so this chart here, what it's doing is it's comparing small cap to large cap based on PE ratios. So if people are willing to put more money towards large cap, obviously the PE ratios are going to be a lot more expensive. But if they're favoring the small cap, they're going to be more expensive. And so actually small cap tend to be a bit more expensive overall. But you can see here that actually in more recent time, that actually it's quite different. You're seeing that there's a little bit more favor to small cap. So for me, I look at that as getting a little bit of a bargain for my dollar. And so I feel like that's a really good bonus to have in regards to why having something like VTI would be good. So which one should you choose? I personally would choose VTI if I was just simply looking at a portfolio that had, maybe 3 items in it. Maybe if I was just doing total stock market, international, and maybe a bond index, or just even if I was just holding just one and that was it, I would personally choose VTI. Again, this is not financial advice. This is simply just education and my personal preference. And the other thing too is when I look at the economic condition of today, I see that there's higher interest rates. I believe that interest rates are starting to lower. I believe that we're still wanting to see a little bit more of a boom in the economy. We've come out of a hard time with COVID, and we're just really anticipating having that bounce back in our economy. Since that time, having inflation run rampant, now we're starting to get that under control. So I really feel like it might be a really good time for that cycle to take place, and that the small caps will show themselves to prove themselves effective in the time that they're usually effective. And the other thing too is VTI, it adds a little bit more diversification. And so I don't want to necessarily hold only the large companies. I personally like to hold the larger market. Again, you might have weightings that will differ over time. So you might have, right now we've got the Magnificent Seven. You've got a really, large cap concentrated stock market, where in times past that hasn't always been the case. It's been varied from time to time. And so, we may go back to that, and who knows what that will look like when we compare these two then. Now, that doesn't mean that I'm disqualifying VOO, or doesn't mean that you should take what I'm saying and say, okay, well, I'm going to go and buy VTI then. VOO is also a great choice. Again, if you're valuing the stability and the characteristics of the large caps, maybe you're closer to retirement, you care more about that slight increase in dividend income, you want less of that volatility. There's lots of reasons why you might do VOO. Or, maybe you have all of your small cap diversified in a different way, and so you're just looking for something to capitalize on that large cap. And so those are some real unique differences when you're looking at it from your own situation. Nobody should just give financial advice and think that this financial advice applies to everybody. Everybody's situation is uniquely different. The way that you have your investment portfolio set up, your time horizon, and so many other factors, your risk tolerance. There's so many other factors that are involved. So you really have to factor in everything there. So leave a comment down below. Are you more of a VTI investor, or are you more of a VOO investor? Just explain your reasons why. I'd be more than willing to just comment down below and have a little chat with you. And if you like this content, you want to find more content like this, like and subscribe